All right, today is Friday, October 10th. We got a pretty nasty sell-off today, pretty much instantaneously on the headline from Donald Trump talking about he wants to put massive tariffs on China because he's not happy of the fact that they are strategically cutting off access to their rare earth metals to certain countries. So let me zoom in here on the time frame. So this is pretty much this is a 5 minute chart right here. And when this tweet came out today, immediately the market started selling off. We're all-time highs, hit an all-time high today. And then shortly after that tweet, we did nothing but sell, sell, and sell some more. As you can see here, the volume definitely spiked up on that news. So it's just a ton of selling across the marketplace. And then I'm going to zoom out here on the time frames. Let's come out to this. This is a 30-minute chart. As you can see, just very, very steep selling here. This is the 5 day moving average. Immediately touched that, got a slight bounce, went through that. Then we came through this 10 day moving average right here, which is the cyan line. And we also sliced through the 20 day moving averages. So all of these short-term moving averages, the market sliced straight through that like it was basically like a hot knife through butter. The next one that has my interest here is the 50 day moving average, which is this red line, the 50 day, and then this 100 day, which is right below it, this dashed gray line right here. So these are the two areas that have my interest. Basically, I was kind of watching the market throughout the day. The selling never let up, so I just made the decision. We've had a good bull run. It's time to get out of the marketplace. So protecting profits, being defensive here, and then zoomed out. This is the daily chart right here. So each one of these candles is 1 day, and this goes back to the previous kind of tariff crash that we had back here when Trump got in office and come up with that crazy idea of let's put tariffs of 50% and 60%, the reciprocal tariffs. He had this crazy idea to put these really massive tariffs on. The market immediately sold off in one of the fastest declines that I've ever seen. So basically, what gets my attention is, we'll zoom this in here, is when we're slicing below these moving averages, the 10, the 20, and we're just slicing through that. If we slice through this 50 right here, definitely would have my attention. So I don't know where we go from here, but it looks like the next place that we're going. I mean, as you can see, like just on this daily chart, like this is just a massive, massive candlestick here on the QQQ. We're down 3.47% in a day. These are massive institutions, massive funds selling the market this aggressively. This is very aggressive selling that we're seeing here. I highly doubt that we get a V-shaped recovery and we just bounce back on Monday and just keep coming back up. So he's threatening massive tariffs on China. Who knows where this goes? He's very finicky on these things. He says one thing and then the next day he does something else. So who actually knows where this goes? But taking a look at this, like I said, this 50-day really has my attention here. And it's also kind of coincides with this lower Bollinger Band here as well. So we had a good run up. We were kind of range bound here at the end of last year in 2024, and we weren't really breaking out of this range. And then he kind of came up with that reciprocal tariff idea, threw us into a pretty quick V recovery bear market, recovered from that once we kind of backed off those tariffs and lower the tariff rates. And now we're saying we're going to put huge tariffs back on China. So this right here is the QQQ that we just looked at. Taking a look at this, we'll come over here and take a look at the SPY. The SPY today was down 2.7%. Once again, very similar chart, just a massive red candlestick here. And this is actually, I believe, a little bit below its lower Bollinger Band, but once again, looks like we're headed towards that 50-day moving average in red. So this is just kind of what I'm seeing here. We're definitely getting these huge volume spikes. That's definitely above this volume average line right here. The volume average line is this yellow line right here. So we're getting these large volume spikes, and you can see it here as well. This is the 50-day volume average. So this is that yellow line is the average volume over the past 50 days, and we just got a massive spike here on that. So I can actually zoom in, make that a little bit bigger, and you can see just an absolute massive amount of shares. And this volume data, if you look right here in this area, when I highlight this, the volume data is still coming in for the day. But as of right now, it's 153 million shares of the SPY that was sold off today. So like I said, defense first. We're going into earnings season. We are going to Q3 earnings, so let me pull up that for you real quick. Let's see, earnings calendar. So this is the earnings calendar. We kick off next week with Fastenal. Then we have JP Morgan on Tuesday. ASML and Morgan Stanley is going to be on Wednesday. Travelers Insurance, Taiwan Semiconductor, Interactive Brokers on Thursday. American Express on Friday. And then here's where we start to get into the this is where we start to get into the meat of the earnings season is the week after that. If I could somehow, there we go. So as you can see, after that, we really start getting the bulk of these companies: GE, Nasdaq, Raytheon. Over here, we've got Amphenol, CME Group, GE Vernova, Veritiv, and then at the end of the month is really when this kicks in. And I believe the first week of November is really going to be the meat. Yeah, this first week of November here and the last week of October, this is going to be the meat of earnings season. So like I said, we're going into earnings season. I recommend protecting your profits that you have. We've had a good run up. Don't get greedy. Protect these hard-earned gains that you got here in the marketplace. And we'll just see how earnings comes in. We'll see how the earnings come in, and from there, the other thing that we're going to wait for is also what's the resolution on the tariff situation. Do we enact the tariffs? If we do enact massive tariffs on China, I suspect that we're just going to get more and more selling, just like we did back here at the beginning of the year. And this sell-off here, just to give you an idea of potentially what could happen, I don't think it'll be as steep as this because it's not the entire world that we're putting these steep tariffs on, just China. But this was a 21% sell-off in a very short amount of time here. So let's go back over to QQQ as well. Same kind of thing. Let's measure that bear market. From peak to trough, this bear market, this is a 25% decline here as well. So this is just an idea of where we're at and where we could go. Next thing I'll take a look at is the VIX. So this is the volatility index for the S&P 500, and the VIX today was up 31.8%. So huge spike in the VIX, just absolutely massive spike in the VIX right here. And then I've kind of got this line in the sand drawn on my chart here, and this is kind of the average for the VIX for the past like 4 or 5 years right here since the pandemic. This has kind of been where the average is on the VIX. It's about 2038. So anything under that 2038, I kind of consider it like we're in a low VIX range, especially when we start getting down here, 14 to this 13 area. We're in a low volatility environment, and then high volatility over the years, I would say, is up in this 30 handle. So just something to keep an eye on. We'll take a look at the VXN. The VXN was actually not quite as active as the VIX was. So the VXN is the volatility index for the NASDAQ 100. And the VXN was up 25.9% today. So that's just a quick look here. And then also this blue line, this blue moving average right here, this is the past 11 years. So basically, if you get below that blue line, in these indexes, that's basically a recession, and we're so far above that. Basically, we need like a 50% drawdown to get near there in the Nasdaq, and in the very similar in the S&P 500. We would need like a 50% pullback to get near this recession line. So I'm not worried about that. Really, it's just kind of taking a look at this. Zoom out here for the long-term picture. This goes all the way back to the bottom of the 2000 Y2K crash. So the dot-com bubble, this is the bottom of that right here. It bottomed right here around 2002. And the markets have, we had the great financial crisis. That was a 57% drawdown. But since then, all the way up into 2022, we had a 615% run from the bottom up to the top. And then we had a little bear market here where it went down 36%. And then from that bear market, we're up 76%. 76% into February. So that's not actually where we just came down from. But the point that I'm trying to make is the markets have been good. We've gone up. Hopefully everybody's made a lot of money on their long positions. And like I said, now it's time to play defense. So with that said, we'll come over here, take a look at the my earnings tracker. So this is from Q2 2025 earnings. These top companies, they're still performing well for the quarter. App11, they're still up 45%, even with that SEC investigation. So we'll pull up the App11 chart. They had a pretty big sell-off the day that they got added to the S&P 500. The SEC announced that they were opening an investigation into issues around how they retain, user data or client data. So we got a pretty nasty sell-off a few days ago here in App11. But as we can see, for the quarter, from when they reported. Let's see. That's NVIDIA. So they reported right back here. I mean, we're still up. We're still up a pretty decent amount on App 11, and we're seeing that in a lot of these companies. Celestica's still up, 40% even with today's sell-off. Agnico Eagle Mines is still up 33%. Google's up 24%. BWXT, they supply nuclear fuel. They're excuse me, yeah, BWXT right here. They're still up 23%. So, it's not all doom and gloom right now. Amphenol up 19%, Veritiv up 18%, TSM still up 18%, Apple's up 18%. So just something to be aware of. The dynamic of the market has changed, in my opinion. This huge impulse it's saying a lot right here. Just this massive drop with this massive spike in volume. I can't say it enough. Be defensive, protect your profits, and we'll wait for the markets to kind of reveal their hand. If we start to form a bottom here around the 50-day, that would be interesting. And then we see how earnings comes in the next couple of weeks, or we come down here to this 100-day moving average. In which case, maybe we can find some relief here, find some support. Market starts to build a base, and then we can rally up from there. So that's pretty much all I got for now. I will put out a video with the some leaders in the market right now, just what the market leadership is looking like going into Q3 earnings of this year, and I will dig into some of the issues. But to talk about this tariff situation, it is a little odd, I guess, that we keep enacting these tariffs, and we're enacting tariffs on the entire world all at once, including our allies, which to me doesn't make a lot of sense, because it's like we could know, or we should have known ahead of time that China would retaliate, especially from the first trade war. Of okay, well, we're going to stop buying soybeans. Trump got in office his first term, went down the trade war path. China's response was they started diversifying away from U.S. markets. So especially for livestock and agriculture products, they started sourcing things from Brazil, Argentina, the EU, Africa. They were basically saying we're going to diversify where we're getting our food from. So now we're in trade. He's in his second term. We're in the second trade war, and what we're getting is much of the same. China is basically saying that they're putting restrictions on their rare earth magnet exports. They haven't bought soybeans since May. Our U.S. soy market has been built up over decades to supply China with soybeans. Literally 50% of our soy output goes to China, and the farmers are saying that they don't want a bailout, they want a market to sell to. Well, we don't have a market to sell to. The rest of the world cannot absorb that 50% extra amount of soy that we have now. There's nowhere else to absorb it. And China, like I said, they've diversified. They're buying soy from Argentina, they're buying it from Brazil, they're getting it out of Africa. So China's kind of in a position where they're diversified their markets, and they're less reliant on us. China's got a lot of structural problems with their economy. They have a lot of structural problems with their demographics due to the one-child policy back in the 80s and 70s. So I don't know if we necessarily need to poke the bear for them to kind of implode themselves. So with all that said, I think the wiser thing for the U.S. to do. I think a 10-year supply of rare earth metals would cost something like $25 billion instead of us spending $20 billion bailing out Argentina or some of these other things that we're wasting money on. Before enacting the trade war, we could have bought a 10-year supply of rare earth metals for $26 billion, had those stacked up, and then gone down this trade war path. Not that I agree with the trade war or the tariffs, but I'm just saying that probably would have been the smarter thing to do. Back in the Cold War, when we were fighting the USSR, we needed titanium. Russia was the producer of titanium. They had all the titanium. They were the ones mining it. They were the ones refining it. So the U.S. simply built a shit ton of shell companies, and we bought titanium from the USSR to build the SR-71 Blackbird and to build our nuclear submarines. So it's play chess, not checkers. Is kind of where I'm at with this. So that's my 2 cents in the market. Like I said, be defensive, protect your profits. The market, it takes a staircase up, but it takes an elevator down. And I do not want to sit around and, watch this elevator crash down. So I'll put out some more content, basically talking about the top companies going to earnings. And we'll also take a look at some macroeconomic data as well. But yeah, just protect your profits and be defensive. This is definitely the time to be defensive.